Welcome. You're watching The Money Show. I'm Kavita Thapliyal, and this is a show which is one-stop destination for all your personal finance queries. Anything you want, investment strategy for any financial goal, or even advice on your insurance policies, this is the place where you need to send across your queries. And our experts will not only answer them live, but also tell you how to align your financial portfolio with your financial goals. So just in case you have any query, you can send across your questions on our WhatsApp number and our email ID, and do mention the existing strategies for your financial goals, that so far wherever you've invested, and what is going to be your investment trajectory, so that it helps our experts to formalize a strategy for you. All right, so it's Navratri and also GST Bachat Mahotsav kicking in from today onwards, and it's time to get your portfolio strategies also checked, and in fact festival strategies, I should say that. I am joined by Vinay Pahadia, Chief Investment Officer, PGIM India Mutual Fund. Vinay, hi, good evening and welcome to the Money Show, and happy Navratri to you and happy GST Bachat Mahotsav as well. And as PM Modi also was mentioning, that it's not only chips and ships that should be made in India, but now it is the GST reform that the world will witness, and the theme from capex to consumption and the way it will play out. This is the first step, one more step, in fact, I should say, that we are taking in the direction of Atmanirbhar Bharat. So, let's talk about, let's begin the conversation with this entire GST Bachat Mahotsav and the benefits that we'll be seeing rolling out maybe in the third or the fourth quarter. Vinay.
Hi, Kavita. Good evening to you and all your viewers, and of course, good wishes for the Navaratri season. So I think I agree that there has been a massive stimulus given by the government of India via this GST Bachat Mahotsav, or the reduction in GST, and this is likely to kickstart the consumption weakness. Which means it's expected to reverse some bit of weakness which we were seeing in the consumption demand over the last 6 to 8 months. So I think it's a fairly strong and a material stimulus given by the government, and this is likely to remain on a sustainable stimulus, and hence this is likely to result in good volume growth across the length and breadth of consumer discretionary companies as we see it today.
So, Vinay, let's talk about the market and the way market has been playing out a lot of news. So, GST, it's already factored in to a larger extent. Last week, we saw that market showed us some resilience also. We did see, certain amount of profit booking last week. But then again, you talk about India-US trade talks. You talk about GST reforms kicking in. A lot of things have been factored in already in the market. Now, do you agree with the fact that undertone still is bullish as far as the market sentiments are concerned?
So, Kavita, sentiment is very, very bullish, as we can clearly see across different asset classes in India. We are generally, investors are fairly bullish. So if we look at most of the fund flows, the domestic flows remain extremely positive, but there is a reduction in flows from foreign investors. There's a reduction in flows from a lot of the private equity investors, strategic investors, and we are seeing some bit of promoter sales as well. So in terms of fund flows, clearly there is a lot of optimism which is visible in retail. But I think we also need to remember that while we have talked about some of the key stimulus, so we have just talked about the GST stimulus, but there also was the income tax reduction, which was a material stimulus given by the government. There has been a monetary stimulus in the form of reduction in interest rates, and there has been a monetary stimulus in the form of increased liquidity due to reduction in the CRR. So these are material sort of stimuluses given by both the monetary and fiscal authorities. And we also need to remember that there is one more bit of mini stimulus which is likely to come in the next 1 year's time in the form of implementation of the 8th pay commission, which is once again likely to result in a significant hike for the central government employees, and they will also start getting their arrears. and hence that should also help arrest some of the weakness in consumer environment which we were seeing. So I think generally the stimuluses which we are seeing in terms of both monetary and fiscal stimulus should help reverse the course of macro weakness which we were seeing since the last 1 year's time frame.
All right, let's
So
talk
I
about.
think having
Sure.
said that, we need to also remember, I think as you correctly highlighted, there have been other headwinds. The predominant headwind amongst them is the tariffs imposed by the United States on India. So at this point of time, there is a significant increase in tariffs, which has resulted in a significant drop in the trade which we are doing with US. And if these sustain for the next 1 year's time, it could have a 60 to 80 bips impact on the GDP, and that's pretty material. So I think a quick resolution of these tariffs is extremely important for sustainability of growth for macro or for India.
Right. Now I want to understand your sector plays. How much of a consumption basket you think is still left to play out? We are looking at autos gaining momentum and a lot of interest coming up over there. Apart from consumption, there's one defense sector also which is doing very good. PSU banks are on fire. So what is your take in terms of sectors across market caps?
Sure. So I think consumer discretionary is a very important sector where we are materially positive across most of our funds. And that's been a long-term positive view, simply because India is a growth economy, and we are clearly seeing a very strong improvement in volume growth across consumption categories, especially on the consumer discretionary categories, and hence we are fairly optimistic in there. But some of the other sectors which are in a structural growth stance include the healthcare sector, which includes the services and pharmaceutical businesses. We like a lot of the larger private sector banks, where we think they are potentially poised to capture the same India growth story, which is like funding the consumer discretionary expenditure for retail investors, for retail consumers. And we also like the telecom sector, where we think the valuations are fair and the growth is likely to be reasonably good, driven by increased consumption of data across the length and breadth of the country. So these are some of the sectors where we are reasonably positive.
Uh, I also want to understand sectors where you think the valuations are really high, and you might not want to pick up those sectors. And also, in fact, this is a time where even investors need to reshuffle and realign their portfolios, looking at the news flows and from here the longer term trajectory. We've seen a lot of sector rotation as well. Sectors that you would want to stay away from.
Sure. So while there are sectors which we think are likely to underperform, but they are not just because of valuation reasons. So, for example, we are underweight on most of the commodity-oriented sectors. We are underweight the energy and utility sector, and we are significantly underweight the IT sector. So for example, the IT sector is not cheap. I mean, not expensive, but it is still underweight because we think that there is a potential for disruption in this sector, and it could be a case for a value trap to remain invested in this sector. So I think we are underweight the IT sector, energy and utility, and material sector. But Kavita, to just highlight a bigger picture, I think we think that the real big challenge in terms of valuation is in companies which are low growth and low quality type of companies. So these are like cyclical sparks, or these are like cigar butts. These are appearing to be cheap companies, but actually they warrant a far lower multiple. And these are companies which are really overvalued or are in a bubble zone today. And we would be extremely cautious in investing in these kind of companies.
All right. I also want to understand, the kind of news flow that you would be expecting. November is a very crucial month where, again, the US trade talks would be taking the center stage and making headlines. I mean, although it has already started, I mean, it's always there in the headlines these days, but yeah. Okay, having said that, I also want to take a check on the IT sector. Now, the latest statement by President Trump, on raising the fees for H-1B visa. A lot of experts are analyzing it the way as, it is just a limited reaction that we might see on our Indian IT sector. But do you also agree to this, and also the fact that, the large caps IT especially will be able to absorb a lot of costs? Mid cap IT, if they have any exposure, then that could be a problem. How would you like to explain this?
Sure. So I think, Kavita, the way we would want to look at this sector is like this. The sector, first and foremost, is not expensive, and that is very clear based on the current earnings and the current level of business. However, this is a sector which is dependent on advanced markets because companies are largely export-oriented companies. And now, when a developed country like US, which is a fairly large customer, it comes out and imposes some sort of these restrictions on the companies, it clearly sends out a very important message. And the message is that they want to reduce the level of outsourcing, or they would want the local population to be getting a much higher number of jobs. They don't want the jobs to move out of their country. So that is a very important concern. The concern is not about the current impact on the earnings. It is more about what is the thought process of the government in that country. And clearly, the message is that they would not want more jobs to be outsourced. They don't want more jobs to be shipped out, and hence I think that is a bigger worry than what is the current sort of the announcement. So we would worry more about the future course of action on this sector rather than what has been already announced.
All right. I also want to understand, your fund house performance so far in terms of investor interest. Now the regulator wants, a deeper penetration towards B30. A lot of incentives for distributors have been announced. How are you looking at this? And so far, where is the flow coming in terms of funds that you have? What kind of investor interest do you think is able to be we can observe or note in your fund flows?
Sure. Generally, Kavita, I'm not privy to extremely granular level of data on fund flows, but I can tell you from the broader picture which we are seeing, the funds are flowing in from across the length and breadth of the country. Fortunately, there is a very strong move towards financial investments, and mutual funds as an industry has done very well by making the entire approach towards investing in mutual funds fairly straightforward, simple, and it's been fairly well educated now. So I think most people from even far-flung areas are now fairly well versed with what a mutual fund is all about, and they would want to participate in the India growth story through the mutual fund route. So I think generally we are seeing good flows across the length and breadth of the country.
What funds are we talking about where investors are ramping up their investments for your fund house?
Yeah, I think it's, as I said, it's across the length and breadth, and not particularly concentrated in a particular geography or a particular type of place, or like, for example, tier 1, tier 2, tier 3 towns are all participating in a very similar fashion.
Any specific scheme where you are looking at good interest coming in?
Once again, we are seeing fairly good participation across different schemes, because while there was a point of time when people were more interested in the small and mid cap schemes, now there is a fairly well spread out sort of flows coming in across different types of schemes, which could include the large and mid cap scheme or a flexi cap scheme. So yeah, right now we are seeing a good interest across different types of schemes as well, not just a particular type of scheme.
All right, I think that will be all. Thank you so much, Vinay, for taking time out and helping our viewers understand the kind of strategies they might want to have for their portfolio, and also helping our viewers understand the market trajectory. Thank you so much.
Thank you very much.